Stephen Trent of SDT Capital Advisors joins us now for more. Stephen, good morning. Good to see you.
Good to see you. Thank you for having me.
First reaction, sir, to the numbers we got from Delta earlier on this morning. What's your takeaway?
Yeah, look, I think the numbers were solid from a fundamental perspective. They did $1.56 per share. That was a penny above our forecast. It was 6 cents above the street. Unit revenue was very strong. And I think that's the story people are talking about. Are these carriers maintaining demand with everything going on? Are they able to raise unit revenue enough to offset what's happening with jet fuel kerosene? I think the answer is yes. The action in the pre-market suggests something a little different, and perhaps elements of the street were looking for a guidance increase, which didn't happen.
Don't you think it's impressive they were able to maintain guidance, given they, in their own words, experienced the highest quarterly fuel expense in their history?
Absolutely. I think from a fundamental perspective, the numbers look very good. The guidance looks solid. You know, $6.50 to $7.50 a share is above this street at $5.97, and we're actually a little bit below consensus. So that in itself was a feat. You know, if we go back 2 months ago, 3 months ago, I think the street was looking for big guidance cuts. You know, what's going to happen with fuel? They'll raise fares too much that it's going to start hurting demand. You know, we start getting into these subtleties of the K-shaped economy. You still have premium and co-branded card remuneration outstripping main cabin. And I think that's the driver, and that's going to continue to be the driver.
Yeah, how much can that continue? I was looking, actually, that passenger revenue came in light and everything else beat. And the reason why you can have the bread and butter of the business, which is passenger tickets, not beat and still have a massive profit beat is because of American Express. It's because of some of these other partnerships that have lines of revenue. Is that getting to be kind of the driver of profits going forward? I mean, I know it's not the major driver, but how much do you see that as sort of the make it or break it of which airlines are successful going forward?
Yeah, absolutely. I think that is a key point. You know, the 16% growth in American Express co-branded remuneration over the quarter is a big deal. I believe around the order of $2.4 billion in the quarter. So premium passengers are still the anchor. You have the top 10% of U.S. consumers basically driving all the demand. And not all of that demand is coming in premium cabin versus main cabin. Exactly, you just said, a lot of it is now coming from co-branded and loyalty. And I think if you're a network airline versus a discount airline, that's exactly how these carriers have been able to de-risk their earnings streams since COVID. If you look at what they've done in cash flow from ops, there's been a massive increase in their cash flow from ops.
What does that mean for the discount airlines, for the likes of Frontier, for the likes of JetBlue?
Yeah, so, we think it's a tough one for them. You look at what's happened versus 2021, for example. Frontier's cash flow from ops is down 85 some odd percent if you look at its latest 12 months cash flow from ops versus 2021. And that's in nominal terms. Southwest is up a mere 3%. So if you inflation adjust, that's also down. You look at United, on the other hand, up 360%. American Airlines up 591%. So this whole thing we've been seeing with premium driving the train, we've seen this broadly in earnings wallet share. The network airlines now are practically driving all the earnings wallet share. Okay, Southwest is still profitable and Frontier is improving, but they're not nearly as strong as the others. So I think that's exactly the reason you're seeing the likes of Frontier and others trying to add premium. Are they going to add enough premium? Are they going to add enough co-branded card like United Airlines? I don't think so.
Well, and can they get the corporate clients? I mean, that's the other issue, because corporate really drove a lot of the earnings that we saw from Delta. Can you get that kind of relationship if you don't have the footprint and, frankly, you don't have the same type of longstanding reputation?
Yeah, I think that's exactly it. I think it's really hard. If you don't have the premium lounges at the airport, you don't have global capillarity, both directly and through global alliance partners, and a long history of premium cabin. If you've traditionally been a domestic airline that had sold discount seats pre-pandemic, it is very hard for you to become that different animal. So I think the path is going to be challenging for the discount airlines versus the network carriers.
That raises a big question. You're not in the stuffy seat over at a bank anymore. You've got flexibility to tell us what you think about the world. Apollo versus Castle Lake for EasyJet. It's not a name you've covered historically, but what kind of business are these guys getting themselves into? What's your message to them?
Yeah, that's actually a little bit of a tough one. I mean, you know, airlines, generally speaking, are, they're dangerous, no? I mean, on the surface, they're simple businesses. So everybody thinks they understand how the businesses work. But getting down in the weeds and the subtleties and the way these things trade and the undercurrents that I was just mentioning about premium and co-branded can get really choppy. So I've seen over the years, private equity get burned. Maybe you have some instances where you've had some really powerful activist shareholders come in and do a reasonable job in terms of share price reaction. You can say that, for example, with Southwest, even though Southwest is still not getting the job done in terms of their cash flow from ops. So this EasyJet thing, I saw the headline. I would advise them to proceed with caution. This is a tough space, and that's a tough segment of the market as well. Maybe if we were talking one of the network carriers, I'd be a little more comfortable.
What's one of the headlines? What's one of those quotes? The best way to make $1 million, start with $1 billion, buy an airline. Right? I forget whose line that is, but ultimately, that's how tough that business is.
I like that you have no opinions.
I have no opinion on this.
It was very clear. I love the way that you asked these questions. You're like, what are they getting? What would your message be? And Stephen's like biting his tongue. Like, what are you thinking?
He told us what he told us what he thinks.
Exactly.
It's a really difficult business.
Yeah, I mean, we see that time and time again, and especially if you're trying to break in against some of the behemoths in the industry.
You ask people what their favourite airline is, they give you the same answer all the time. It's Delta Airlines. I like the stock.
Delta and United.
Right?
Those are the two.
You've got a different view, though, and I wanted to finish there. Your top picks in this space, it's not number one, it's not Delta. It's something else. Why?
Yeah, we're like a modest overweight in Delta. Kudos to them. Great airline, but it's harder for them to surprise the street versus others. I think the pre-market activity is showing exactly that. The one we like the most is Copa Airlines in Panama. And if you look at Delta doing a low double-digit margin on 2025, for example, EBIT margin, Copa's EBIT margin is in the low 20s. It's levered 0.6 times. It's got a 4.5% cash dividend yield. And in a lousy year, it's going to do $200 million in free cash flow. So for an airline that has, a little more than 100 planes in its whole fleet, we think it's got a moat around its main hub down there in Tucumán Airport in Panama. So this is a carrier that, within the aviation group, comes as close to we see as buying it and going to sleep well at night, which is impossible in aviation, but I'm saying it gets close.
I have no doubt that that's now under Lisa's coverage. And that she's already looking for flights to Panama.
St. Andrews State Park, Sea Dragon, Pirate Cruise.
There we go.
I'm looking. Relax on the stunning beaches.
Appreciate
Dolphins.
it. Stephen Trent of SDT Capital Advisors. Just depressing. All these great places Bramo gets to go.
I'm going to Atlanta on Monday, please.
Okay. What's wrong with Atlanta?
Absolutely
Fantastic
nothing.
barbecue.
Fantastic.
What's wrong with you?
Barbecue.
Yeah, good food.
Oh, really?
Yeah.
Have you spent a lot of time there?
I'll give you some places. I've been a couple of times. I'll give you some places to go. Yeah, sure.
Please, that would be great. No, actually, no, look, I'm not going to do a channel check, although if you're going to invite me to Panama. I do think it's interesting. South America definitely getting a lot more clout, especially as people try to go there more. And you see that in the business routes, too, because sometimes these routes actually track where people are thinking about trade and business partnerships increasingly in South America.
The Brit telling the American where to go in the
I
South.
love this. This is great. This is fun.
All right. Let's get you an update on stories elsewhere this morning.